Hi, I'm Paul Goodwin with your Cabot Weekly Video Review. It's been a good week in the markets, but it's hard to say too much greatly positive about it. As you can see, we've had a number of days up, and this is, of course, a great trend. The difficulty is that it comes, pretty much athwart the larger trend. And if we look at the weekly view for the S&P 500 here, again, big up, and then crossing down. So even though we had a good day with the market today, people like the idea that initial claims for unemployment dropped. Long-term interest rates for mortgages, for instance, dropped to their lowest rate since 1971. So this kind of extreme just shows that the markets can't really find exactly where they want to go. As usual, we're saying that if the trend is not clear, the safest place to be is cash, and right now that's clearly the place to be. So if we take a look at my other favorite index, the Halter USX China Index, that shows how ADRs of emerging market stocks are doing, even though there's a little bad data here in late June, which has tightened things up a little more than is actually the case. You can see that right here, the Halter Index is almost back above its 25-day moving average, but it's been heading sideways so resolutely that there really isn't what I would call a usable trend here. Even if the moving average should happen to pop back, or the index should happen to pop back above its 25-day, it could easily fall just as quickly. So right now, recognize what's going on in the market, which is that there is no trend, which is fairly dangerous. Acknowledge the longer-term trend, which is down, and go to cash mostly. I have some stocks for you to look at here. Here's a real favorite. This is Dr. Reddy's, which is an Indian pharmaceutical maker of generics. Beautiful upline here, and if we go to the daily, you can see it again volatile as with the market, but then putting in a really nice new base here, and an excellent volume spike here, showing that there are some big investors out there who are putting money in. So that's one I like. An excellent example of something that has broken out. This is Companhia Brasileira, which is a Brazilian grocery company. And again, looking at the daily chart, it looks like we have a great trend going here. Look at the weekly. What you can see is that there is this higher level that the stock has not yet approached, and although it has had a number of weeks up, notice that the volume is lower than average on that. So this is the kind of stock where we'd say, despite this nice 5-week upturn, we would wait for it to break out above either its 76 or its 79 level on volume before this would be really attractive. And then we have Bancolombia, which I think is a good example of a stock that has broken out to new highs. You can see new highs going back, as far as the eye can see, but really, and volumes even up down here, but this is primarily an income stock, pays a nice 2.6% dividend. So in this case, although we have what looks like a breakout, it just isn't an appropriate growth stock. So of the three, I would say Dr. Reddy's is the best looking. So that's it for this week, and hope to see you again next week. Thanks.